Becoming wealthy is not as simple as it may seem, which is often overlooked by many individuals. While it is true that some individuals may come into vast amounts of money through inheritance or winning the lottery, a survey conducted in 2022 revealed that 88% of millionaires are self-made. In other words, the majority of wealthy individuals have achieved their financial success through their own efforts, rather than relying on inheritance. This implies that a significant number of people who become rich are dedicated and hardworking. However, their success is not solely attributed to hard work. There are additional factors at play. What many millionaires do not openly discuss is their utilization of secret psychological strategies to increase their earnings and savings. In today's video, I will reveal 5 psychological techniques that can assist you in attaining wealth. Number 1. Don't trust yourself. The rich understand something that the poor often overlook. Nobody is perfect. In other words, wealthy individuals tend to possess a higher level of self-awareness compared to those who are not as financially well off. This awareness drives them to employ strategies that minimize their inclination for self-sabotage. One of the methods they utilize is automatic deductions. While generating income may not be a challenge for the rich, the hurdle lies in transforming that income into substantial net worth through savings. Even the most responsible individuals find it difficult to resist spending when faced with tempting opportunities. To counteract this, the wealthy prefer to automate their saving process. If you're unfamiliar with automatic deductions, here's how they work. A portion of your earnings is withheld from entering your primary bank account every time you get paid. Typically, this money is directed into a separate savings account. Many affluent individuals take this practice a step further by imposing restrictions on accessing their savings account. This ensures that the allocated funds cannot be spent under any circumstances, thereby guaranteeing continuous growth of their savings over time. Number 2. Making small choices. The wealthy individuals are aware of the significant financial impact that small choices can have when they are accumulated over time. Even the act of saving a modest amount of money can have unexpected empowering and motivational effects on an individual. To illustrate, let's consider the act of saving just $5 per day with a compound interest rate of 10%. After 1 year, this may not seem like a substantial amount, resulting in savings of $1,885. However, if this practice is sustained over a span of 40 years, the end result would be $948,611, which is a considerable sum of money. Apart from amassing a substantial financial safety net through the cumulative effect of these small but positive choices, the act of daily commitment to saving provides the wealthy with a sense of control that many individuals lack in their financial lives. Numerous aspects of life are beyond one's control, such as the economy or the job market, which can easily lead to discouragement when things are not going well. To avoid feeling defeated, it is essential to give oneself the opportunity to make choices concerning aspects that one can control. Choosing to save money is one such small decision that grants individuals a say in their financial lives. The power of this psychological technique does not lie solely in the act of saving $5 or allocating an extra $25 towards debt repayment. Instead, its strength derives from the fact that individuals are actively making decisions that assert their control over their financial lives. Number 3. Sleep on big purchases. Did you know that sleep not only reduces stress, improves memory, and boosts your mood, but it can also have a positive impact on your financial decisions? Many people overlook this fact, but sleep can actually be a valuable tool for saving money. Firstly, when you don't get enough sleep, your decision-making abilities suffer, increasing the likelihood of making riskier financial choices. That car you wouldn't normally consider buying might end up parked in your driveway, simply because your judgment was impaired. Secondly, getting proper sleep allows you the time to carefully think about significant purchases. Sleeping on major expenses gives your unconscious mind a chance to process the relevant information and analyze it while you dream. It's like your brain is working behind the scenes to help you make wiser financial decisions. Now, let's move on to another psychological trick used by wealthy individuals to accumulate riches: spending only in cash. You might have observed someone paying for a fancy dinner or an expensive item with a wad of cash and thought it was just a show of wealth. However, there's actually a calculated reason behind this behavior. When we spend cash, whether it's on groceries or a new phone, we become more aware of the financial impact of our actions. Physically handing over money and seeing the depletion in our wallet creates a sense of financial consciousness. On the other hand, when using a credit or debit card, the potential to spend seems almost limitless, and we tend to overlook the monetary consequences. This phenomenon is known as coupling by researchers. Paying with cash immediately reveals the cost of an item, which can be a bit painful. However, with credit card payments, there's a time gap between the purchase and the actual payment, making the cost feel less significant. To put it into perspective, a study conducted by MIT in 2001 compared spending behavior when using cash versus credit cards. The results showed that shoppers tend to spend up to 100% more when paying with a credit card instead of cash. So, if you want to control your spending and take advantage of this psychological trick, consider cutting up your credit cards and opting to carry more cash. It can help you stay mindful of your expenses and make more conscious financial choices. Number 4. Imagine your future rich self. What is the common thread among great athletes, famous actors, and successful entrepreneurs? Apart from their wealth, the key element that unites them is their use of visualization. Nearly all accomplished individuals will emphasize the need to envision oneself achieving goals before they can be accomplished in reality. Unfortunately, some people struggle to see beyond their current day-to-day circumstances. Consider the example of spending $5 on a Starbucks coffee. For millions of people, this seems like an inconsequential expense, and they willingly part with their change to satisfy their caffeine addiction. However, for those aspiring to become wealthy, that same $5 carries greater significance. A wealthy individual faced with the choice of spending $5 on a premium coffee would likely consider the future implications of that purchase. They recognize that $5 today can grow into $100 by the time they retire. If you were to think of the purchase in this manner, you might reconsider, right? What sets the rich apart from the poor is their continuous practice of assessing the future cost of their spending decisions and evaluating whether those choices align with their envisioned wealthy lifestyle. It's important to note that this visualization technique is not a recent development. Napoleon Hill's timeless classic, Think and Grow Rich, first published in 1937, outlines a step-by-step approach that combines visualization with action. Millions of individuals have successfully employed this technique. In the book, Hill suggests that the first step is to focus your mind on the precise amount of money you desire and establish a clear timeline for its attainment. Jim Carrey famously applied this technique in 1990 when he wrote himself a symbolic check for $10 million, post-dated for 1995, as payment for his acting services. He gave himself 5 years to become one of the most accomplished actors in Hollywood, and he ultimately cashed that check he had written to himself half a decade earlier. Beyond visualizing the desired amount of wealth, Hill also advises determining what you intend to contribute in return for the money you desire. After making these declarations, Hill suggests closing your eyes and immersing yourself in the experience of living the rich lifestyle every single day until it becomes a reality. This technique is believed to program our unconscious mind to seek solutions to our financial challenges and enables us to better perceive resources, people, and events that will aid us in reaching our goals. And number 5, calculate the cost in hours. One of the psychological tricks employed by the wealthy to enhance their wealth is converting the cost of purchases into work hours. Here's an example. If you earn $20 per hour at your job, that new $100 t-shirt actually represents 5 hours of your time. Unlike the less affluent, the rich consistently question whether the item they are acquiring is truly worth the amount of time it took to earn the money for it. In the case of the t-shirt, is it genuinely worth 5 hours of your hard work? When you start viewing your purchases through this lens, it has a profound impact on how you perceive the value of both your money and your time. Interestingly, this mindset not only benefits you when considering a purchase, but it can also be applied to evaluate how you spend your free time. Let's delve into that further. Typically, The hours you spend working at your job or on your business are considered productive hours. However, have you ever stopped to assess the monetary value you may be forfeiting by mindlessly scrolling through social media feeds? In 2018, the average social media user spent around 136 minutes, or over 2 hours per day, on social networking sites. Now, let's say you earn $80,000 annually, which roughly translates to $40 per hour. Is spending 2 hours every night scrolling through Facebook truly worth $80 to you? In essence, whether you're making a purchase or deciding how to allocate your time, it's crucial to remember that everything has a cost. This understanding is one key factor that distinguishes the rich from the poor, their ability to assign value to these precious resources wisely. That concludes today's video. I hope it was informative and beneficial to you. If you found it helpful, please give it a thumbs up. I welcome your feedback, so feel free to share your thoughts in the comments section below. Lastly, remember to subscribe and turn on notifications so that you don't miss any future videos. Thank you for watching, and I'll see you in the next one.